Hello and welcome to The View from the EBRD. My name is Stefanie Linhardt and I'm here with Natalie Jaresko, the Ukrainian Finance Minister.
Good morning.
Good morning. Ms. Jaresko, Ukraine has a country event here at the EBRD meeting this year. What do you expect from this?
I think this is a great opportunity for our government, our delegation, to talk about the reforms that we've already instituted and those reforms that are on their way, those things that will make our business environment more interesting, more inviting, more inspiring, and about the priority sectors where we would like to attract investment.
Where especially would you like to attract investment?
I think the key areas for us right now are infrastructure, agriculture, energy, and energy efficiency. These are the areas where Ukraine has strategic advantages. This is an area where Ukraine continues to be very competitive, and this is where the economy is in need of these investments.
You're also working on a significant reform package in terms of deregulation. That's one of the big topics. Where are you in the process of that?
That is what my Minister of Economy spends his days and nights thinking about. So we've already done a variety of individual measures that have reduced regulations in the agriculture sector, in the environmental protection area, and in the general doing business area. But he's looking at something much broader, a sweeping guillotine effect, something that would force every regulatory body to, over a period of time, prove that it's a need to have that regulatory body, prove that it's not a source of corruption, prove that it does meet EU association standards. And if they can't meet those three targets, then they need to shut down. So I think over the next 2 to 3 years, you're going to see an accelerating pace of deregulation in Ukraine.
You're also looking at the banking sector and are trying to improve the banking sector. Where are you there?
There are really three areas. First is strengthening the central bank, its powers, its transparency, its efficiency in terms of being a bank regulator and supervisor. The second is in improving and in cleaning up the banking sector. We've already had more than 50 banks be taken out of the system for financial weakness. That's very important because depositors and customers, both corporate and individual, need to know that the banks that they remain tied to or using are indeed safe. So part of it is cleaning up the system, which I think we're towards the end of that process. I'm happy. Mm-hmm. We've also instituted laws to ensure that hopefully we won't have these types of problems going forward. Part of the bank failures were indeed financial. Post-Lehman, 2009, there was a series of economic and financial crises. But part of it is also the abuse by owners and related parties of owners of their through fraud, through criminal activity, abusing the depositors' trust. We've adopted legislation that makes this enforceable in terms of criminality, and we will be going after those bankers, those owners, those owners or related parties that have abused the system and abused the trust of the depositors. We need to protect our population. We need to protect the population's deposits. And that's probably the final part, which is strengthening those banks in the state-owned banks and strengthening our deposit guarantee fund for our citizens to ensure that we can bring back confidence into the banking system and bring back the deposits that have been withdrawn over the period of the last year.
Good. Well, lastly, I also have to ask you about the financial situation in Ukraine. Obviously, there is the debt restructuring negotiations going on. Where are we in that, and what's your stance?
Ukraine has been through a very difficult time. It's 70-some years of communism, 23 years of incomplete reform, a very, very kleptocratic regime for 4 or 5 years, and now the revolution and this horrendous war. All of this has taken an enormous toll on the economy. The IMF has estimated that we have a financing gap of some $40 billion over the next 4 years. Mm-hmm. That financing gap is met by 3 pieces right now. There's a 4-year extended fund facility that we've entered into with the IMF. That's $17.5 billion over 4 years. And there is a $7.5 billion 1-year, 18-month commitment from our G7 colleagues, our partners internationally, bilateral and multilateral, including the EBRD, which is one of the reasons we're very grateful for their support. They're a big part of that package. And the last piece is $15.3 billion that indeed we need to achieve in terms of savings, balance of payment savings, over the next 4 years from a debt restructuring.
Natalie Jaresko, Finance Minister of Ukraine, thank you very much.
Thank you.